All right, folks, it's that time of the year where we sort of have a bit of a look at what might have happened last year in the property market in 2015, but more importantly, Ben, have a good look forward and see what we think is going to happen in 2016.
Yeah, I mean, we like to do this each year. We've been doing now for 4 years. And I think it's important that we sort of set the agenda in terms of where we see the marketplace going in 2016.
I agree. So we're going to do an around the grounds around Australia, but I think it's really important to get the context of what we're going to be talking about today, because it's really from the perspective of being a borderless investor. So where is the best opportunity to put my money if I'm agnostic and I don't care where I want to be, versus the person who's in their own backyard and they're really specific about where they want to be. So we're going to sort of flesh that out a bit more as we go through, but it's important to get that context, I think.
Yeah, it is, and I think we're going to make some generic statements. So it's really important to understand that with those generic statements, that's the sort of rising tide of all the markets. So I think we want to dig a little bit deeper in this session and sort of talk more about specific types of property and what we think where the demand's going to live and where there might be a bit of an oversupply in each of those markets as well.
I agree. So I don't think we could probably start anywhere else other than the top performer of 2015, which was Sydney. Did exceptionally well.
Yeah, it's a great story. I mean, when I say great story, it's because through 2000 and sort of the mid-2000s and into the late 2000s, and it just started to struggle. It was the economic environment was sluggish. It was mismanaged from a state government point of view. And I think we've now started to see some real movement in terms of infrastructure and those types of things. So what we are seeing is, I think it's a booming economy, and I spent a fair bit of time up there, and I've noticed it. I mean, I lived there 10 years ago. A long time ago, but I lived there for a period of 10 years. So I can see some real changes happening in that market. So it didn't surprise me that it had the run that it did, but I suspect that what we will see is a softening across that broader market that we saw in 2015.
Wasn't it interesting when you talk to people at the beginning of 2015, and it's that what goes up sometimes must, the air must come out of it at some stage, but everyone was thinking, no way, this is going to keep happening, and you get that FOMO that we always talk about, the fear of missing out. But it's interesting that a lot of people in that market have done exceptionally well, but some people who made some poor decisions around asset selection might be feeling a little bit fearful in 2016.
Yeah, I think so. Let's unpack that a little bit further. So what we're saying is that some of the outer suburb areas have performed really, really well. They've moved from sort of 400,000 and 500,000 valuations to 600,000-700,000 valuations. So they are significant double-digit growth areas. But if you actually look at the underlying wage growth and what's happening in those areas, there's real economic stimulus out there, which is great. But I'm not necessarily seeing it correlate straight away to higher income. So once this FOMO settles down and sentiment starts to soften, I suspect those sort of new estate areas and those areas that are, that right on the fringes of town where there's been this sort of hectic buying and this sort of frenzy type buying, those are the areas for house and land that I'd be a bit worried about. The other part of the market that we're obviously worried about is the apartment area. So, tell them about that.
That's what people are really susceptible to, particularly during a booming market where they think, I've just got to buy a property, and then get caught up a little bit in the sizzle. And I think that's a really scary space for some people in Sydney in 2016. But, it's an international city. We talk about it all the time. It's in the top 100. Melbourne and Sydney are in the top 100. As measured by population. So it's never a bad idea to hold good quality real estate in that market. But I think the key part of that phrase was good quality real estate.
There's nothing more scary for me than seeing those images on TV where there's the apartment development and the frenziness of stickers going on and sort of people all hovering around trying to secure that apartment on level 7. That is just crazy stuff. And that's the classic stuff so we'll see, unfortunately, a few of those people who have bought and those properties are going to be realised in, say, late 2016 or 2017, some in early 2018, is that the valuations that they've paid for on paper won't necessarily stack up when the actual valuations get done.
It's kind of a bit of the calm before the storm at the moment, isn't it?
Yeah, it is a bit. And I think if interest rates play on that, so I don't think the RBA has an appetite for moving rates lower or higher for that matter until they see, stronger signs of growth because there's so much spare capacity in the economy at the moment. But if we see the lenders going out there and changing rates higher for effectively a bit of a margin grab, but using excuses like Basel III and all of these secured and making them safer and more robust financial institutions, we could see that will start to play on the psychology of the buyer, who's then thinking, are they going to keep going with this, and how much can I really borrow, and does my money buy me what it used to when interest rates were lower? Because that's what we see. We see traditionally when interest rates go low, we naturally see, and it's universal, you see the cost of money going cheaper, we see asset appreciation when it comes to not only usually residential but also commercial. And we've followed that beautiful trend. We've got that rising tide lifting all ships. But Sydney's a marketplace where I do love its economy. I love its economic activity. I think it's still got some strength in that. I think the construction of what has been pre-sold is going to create jobs.
Yeah.
And I think that has some ongoing effects. So I'm hopeful that some of those valuations will stack up, but I'm fearful of the oversupply in that unit market. And I'm still thinking that the outer suburbs, I think they've overcooked in terms of what the values are. So in some areas, the medians will come off 5-10%.
It's interesting too when you see the perspective of the real estate agent, from behind the scenes, they're starting to get a bit worried now because the frenzy and the activity and the press hard for copies that they were experiencing from the 18-24 months prior is no longer there, and they've got to work a bit harder to get their listings. But
Yeah.
I think that Sydney, if you can get your asset selection right, so avoid new greenfield estates, apartments, and then you can get the investment grade suburb right. I think 2016 could be a good year to watch some really great blue chip assets, because I think it's a little bit too early, but you want to get into that preemptive accumulation phase where you're not in a huge frenzy market. And if you can buy good quality real estate in that capital city, when the market conditions turn, when the negotiating power sits back in the buyer, that's a good thing. It's probably it's too early in early 2016, but I'd certainly be keeping an eye on it, particularly for people, as I said at the top, who are borderless and who don't have a foothold into that market and who do want to have a foothold long term.
Oh, I think you make a great point, and I think this is universal across every fly around that we do, and that is there's still scarcity in 4-bedroom, 3-bedroom houses with land in fully utilised areas close to large employment centres and good lifestyle drivers. So what we do see is when a cycle does turn, there's still that person who's been holding on, waiting to think, oh, why would I sell it? Why would I list now? Because every 2 months my value is going up $10,000. So they're now like, quick, I better list, I better get on. So I think if you're watching the supply side, even in that sort of scarce area, and then seeing the number of buyers around, that's the sort of research I think Bryce is talking about in the sense that that's when don't be greedy on the other side of it either. And that is, if a good buying opportunity comes up and it represents fair value, not emotional value, but fair value, grab it. Because property is a long-term investment. You shouldn't be speculating on it in the first instance. So if you are ready to go, everything's lined up, and you've been watching the market and you've got that confidence, grab it. Everyone might have still buyers and it's still come off a little bit disappointed. Trust me, don't be. In 5 or 10 years' time, the Sydney market will have another cycle. It's an international city, so it's a good market.
And 70% of the market's buying for shelter. They're not buying it as an investment. So, the huge investment numbers that you saw in the finance approvals during that really great time in Sydney won't be the case in 2016. But what about sort of outside of Sydney? You got any views on...
Yeah, the Hunters, it's got some challenges there. I mean, you've got obviously a mix of agriculture and mining, battling it out in terms of accessibility and sort of, climate issues and sort of water table matters. So they're the types of things and coal on the nose, which they've got, some very large open cut mines. So from that point of view, and commodity prices being lower, it's not boding that well for some of those areas, but there is a flow-on effect. I mean, if I look at areas like the Central Coast and sort of the South Coast and the fringes of the city,
lifestyle coastal regions,
exactly. All the way from Terrigal right up through there will be a natural wave rider where I'm sort of thinking, well, up the coast I can get the same type of home for $300,000 cheaper than I can get it in the Sydney basin. So maybe would I look at that, or will I relocate elsewhere? I think there will come a time where congestion, not only for Sydney but also for Melbourne, over the course of the next generation, people are going to make choices around, do I want to go back to what the good old Australia used to be and have more quality work lifetime, or do I want to be in the engine room of our economies, which will be Melbourne and Sydney.
Yeah,
So I'm
good point.
not that bullish on those outer suburbs or the regional centres at the moment.
Yeah, good point. So I guess, in terms of summary for New South Wales and more specifically Sydney, it's probably not the number one focus for borderless investors in 2016.
Yeah, but I'm hearing people already call it a buyer's market. It is not a buyer's market yet.
Yeah,
So it's a balanced market. It'll stay a balanced market, and there'll be tipping factors on each side where the sentiment, interest rates, and all that play in the psychology of the buyer. But if it stays pretty steady and the economy keeps moving and everyone feels like there's confidence in the job market, I suspect there'll still be some growth in the Sydney market, certainly in the good pockets. And those scarcer assets, those townhouses, villas, property on its own title, those type of places, I think we'll still see some positive numbers.
But probably not just expect that double-digit growth that they've got used to.
Yeah, not in the last 2 years anyway.
Victoria,